Bismillahirrahmanirrahim. Subject is Principle of Ordering and lecture is on Vouching. There is basically second lecture on Vouching. First of all, I would discuss the teaching agenda. Vouching of receipts, that means that receipt side of the cash book, what have been received by the company. Vouching of cash sales, that is again cash received by the customer. Method of vouching of cash sale, vouching debtors. Debtors means credit sales. In other words, it is called account receivable by in American terms. This lecture consists a lot of technical words, and it is assumed that most of the students are aware of these terminology regarding accounting, specifically balance sheet and income statement. Vouching of receipts, that is basically the technique of vouching in respect of important item which usually appear on the received side of the cash book will be discussed here. First of all, vouching of receipt means vouching of cash receipts transaction, verifying the vouchers of the receipt side of or debit side of the cash book. So usually it is difficult to vouch the receipt of cash, then the vouch a payment, as some entries might have been omitted altogether. Therefore, only as an indirect evidence like counterfoils of receipts issued, carbon copies of the receipts, contracts, and letter from debtor are available. Why an entry might have been omitted altogether? Because when the cash is received, it has been embezzled by a person, a cashier who are dealing the cash, and omitted the receipts, the vouchers altogether in order to vanish the evidence against the fraud. So what the auditor would do, auditor is suggested to check the counterfiles of the receipts issued, any carbon copy of the receipts, a contract with that specific customer, or any letters that is available to, a letter from debtor available to the auditors. Auditor should check few items at random from the receipt side of the cash book. If he find them to be in order, he may assume that other will be correct. But this sampling base will not exempted the auditor or waive the auditor from their responsibility. So it is necessary for the auditor to compare a rough cash book or the diary with the cash book. Diary means all the check have been received by the cashier, then it is sent to the account department through diary dispatch, and then it is sent to the bank. So this diary dispatch and the cash book must be tally. If the auditor find that there is a time gap between two dates, means if there is a gap of 3 days in cash book receipts, which is unusual, oftenly every day the cash book received, the cash book have an entry for every day, and the auditor find that there is a gap of 3 or 4 days, he should investigate it. It is not necessary that it is a fraud. It might be a national holiday like Muharram, or maybe weekend with the adjacent national holiday. So he should go deeper into the matter. Is it possible that the money might have been received in between the two dates and misappropriated? But he should examine for this misappropriation if there is any unusual gap in the receipts. Vouching of cash sale. What should the auditor do while vouching the cash sales? So first of all, the required evidence for vouching the cash sale would depend upon the procedure for recording the cash sale in the book. Oftenly, carbon copies of the cash memos or cash sales invoice would support such entries, which should be checked. Automatic telling machine, if there is any automatic telling machines are used in entry in the book, cash book, should be checked from the telling record. If automatic cash register is maintained, the summary should be printed out and then checked with the cash amount. Document to be checked by the auditor. He should check sale invoices, cash sale summary, and copies of cash memos. These should be tally on any 1 day sale. In any 1 date, these all should be tally. Internal check should be checked. Auditor should evaluate the internal check system, and if it is proper, then he should rely on it. He should examine the system of internal checks pertaining to proceed from the cash sale have no loopholes or omission of cash sales are existing and from banking into the bank. So internal check may be that the salesperson's sales and cash should be treated by two different people. Often these cash sales are common in retail stores or in small organizations. So there is no engineering involved in vouching or in vouching the record of the small organization such as retail stores or SME, small and medium size enterprises. Vouching of cash sale means cash sale. If large organization involves in cash sale, we should checking of cash memos. Auditor should check cash sale memos and compare it with the daily summaries of salesman and cashier. Verify cash sales carbon copies with the cash memo. Entry in a cash book. Auditor should check figures of the salesman and cash summary entry in the cash book. Ensure that the date of cash memos, cash sale bill tally with those of their entry in the cash book. Checking of cash book. Auditor should compare the cash book with the general ledger as well. The date on the cash memos should be tally with those on which cash collected in respect of those has been entered in the cash book and further in the ledgers. Checking of price list. Auditor should obtain and verify the price list and compare the price list with the cash sales memo. If the cash memo has been cancelled, its original copy should be inspected because there should be possibility of misappropriation of the amount thereof. So auditor should check the price list of the items, and then this price list should be compared with the cash memos and then in the cash book entries. It should be tally because if the price list is one and cash memo and record or the cash memo is made on different price, the difference have been misappropriated by the salesmen and the cashiers. Checking practice. Auditor has to certain practice followed in matter of issuing cash memos of cash sale bills. Cash sales memos bill must be a number and a sequence. So the cash memos are pre-printed, it should be pre-numbered and it should be serially numbered. If there is any missing in the cash leaf in the cash memo, it should be also investigated. Guidance to the client. Client means to the company to whom the auditor is giving the services of auditing. If internal check system is not effective, then the auditor should inform the client about the danger of the fraud. He may suggest some measures. Checking of cash register. Auditor should check the total daily rolls with the entries in the cash book. If cash collections are made through automatic cash register, daily totals entered in the cash book should be checked with the current rolls. So it is again recorded with that of recorded documentation. Vouching debtors to whom the company sells on credit basis. Receipts issued. Auditor can vouch the receipt issues to the debtor for collection of money. If any money have been received from the debtors, the cashier should check the receipts, copy of the receipts that have been issued against that cash amount received from them. Counterfoil are carbon copies of compared with the entries made in the cash book. Further receipts date auditor to make note of the date of receipts and compare it with the date in the cash book. If there is any delay in recording in the cash book, then it should be investigated that why the amount or the cash have been not properly booked when it is received. There should be no difference in the date of receipts and recording in the cash book. Daily list. Auditor can vouch the daily list of the cash collected from the debtors in case of large scale business. Receipt and amount to be recorded in it. Total must be shifted to the cash book on daily basis. Salesman collections. Salesmen may collect the cash through sale of good. They must not be allowed to keep cash. It must be collected and deposited with the cashier. Sales returns. Sale return must be deducted from the debtor, but in case of cash sale, the amount of cash should be given to them. So there are two processes in sale return. If it is on credit, it should be deducted from the account of the debtors. If it is a cash sale, in case of return, cash should be given back to them. Discount allowed. This is one of the area where unusual discount is allowed. It is alarming for the auditor. It is deduction from the debtor account must be deducted in order to find out net amount receivable from the debtor. The auditor should see and investigate that the discount allowed in the customer is authorized by responsible officer. This is one of the point. The discount should be authorized by responsible officer. The terms and condition of the discount should be properly ascertained. Is it practice in the company or anybody had received unusual discount. If it is unusual discount, it should be further dig down in order to find the fact. We should also check discount rate as well. If there is a, for example, it is a practice in a company that 3% discount will be given if the sales touches specific level, and any person receives 5% discount, then it should also be checked and investigated. Should be compared with the prevailing rates in the market. Salesman commission. It is also deducted from cash collected by them. Commission on monthly basis should be paid to the salesman, but total amount of the cash sale should be collected from them. It means that the salespersons should not be allowed to deduct cash when they are receiving the cash from any from customer. Their commission should be on the basis of monthly. Should be on the monthly basis. At the end of the month, each salesman should be paid their commission. They are not allowed to deduct it from the sales amount. Bad debts recovered. This is basically special area, because when bad debt is recovered, it is embezzled by the misappropriated by the employees, because it has already been charged to the expense. So auditors should give special attention to the given amount shown is bad debt written off, as cash can be misappropriated by writing off the whole or part of the bad debt balances as bad. Auditor should ascertain as to who is responsible for writing of the bad debt is bad, or if it is write-off is a bad debt, it should be authorized from the responsible persons. With the permission of the management of the company or the client, the auditor can directly contact the debtor to receive confirmation or verification slip of the if required. Teaming and leading. Teaming and leading is basically one of the bookkeeping fraud. In case of cash, if the company is receiving their outstanding receivables in cash, then it is possible for the bookkeepers or for the cashiers to involve in teaming and leading. In teaming and leading, also called short banking, delaying accounting and lapping. For example, if a money is received from one customer, that is, let's suppose 10,000, 10K, and it has been used by the cashier. From second customer, he received, let's suppose 12,000, and he deposit 10,000 against this first customer, and 2,000 is used as misappropriated or used. And in this way he is continue till the end of the month. At the end of the month, he deposited this 2,000 and 10,000. It is not actually a big fraud. It is just using the money of the company for their personal uses. But again, it is very dangerous. It involves the collection of one customer payment to another in order to make the book balances, and often in order to hide a shortfall or theft. With regard to receipts from the debtors, fraud may be committed by the process of teaming and leading. So the cash should not be received in a hard cash. It should be received through cross-check. This is not entering a cash in a cash book received from debtor and entering it only with a similar amount is received from other debtor, and so on. No misappropriation is committed, but practice should be checked because there is a loss of interest for the period of money is misappropriated. and the cashier may be tempted to commit such fraud of bigger amount and may not be able to replace the same. This is all about today's lecture. Thank you.